Hey gang, good afternoon, good evening, depending on when this finds you. Second or maybe third attempt at this free videos. Hopefully this one will work. Getting kind of tired of the repeat. Had some technical difficulty. The message that I was trying to get across for about the third time now is that I'm not impressed at all with the way the NASDAQ performed today. It had all the making, the structure from Friday, wick on the bottom, strong close, little breach at the top. It had all the chance in the world to make today its day for the bid to come in. But I'll tell you, from the bell this morning, it was the weakest on the board. It started out from the bell trading lower. The Russell started out trading higher. S&P and Dow stuck in the middle, couldn't figure out who was going to win the battle. And as it turns out, we just kind of went sideways to a little bit lower today. So that tells me to kind of don the caution caps, I guess, if you will, for you bulls. Come over to look at the S&Ps here a minute. And I will tell you that if you're super vested long, that you may want to look at buying some cheap insurance for the event of a pullback. If you look at the calendar this week, there is all the making of volatility on the calendar this week. There is a Macy's parade of Fed speak. Draghi's on there from FOMC. You've got, Kaplan, Lacker, Williams, Rosengren, Fisher. The list goes on. I don't even want to try to name them all. Tuesday, Wednesday, and Thursday, there are numbers. Friday's a little bit light, but starting tomorrow, according to the NASDAQ, it looks like we're in for a little bit of a volatility, a little bit of a pullback, which makes sense. Look at this, in a pretty short order for it to pull back, bare minimum back into, say, I don't know, 2135, so something like that, maybe a little more, but 2135 before we look at resuming the bid. That would make sense. There's a few things too that I want to try to pay attention to. I'm going to go and look at in detail over in the premium video, but the dollar is telling me something. Looks like it might be ready for a little pullback. That would make the euro bounce a little bit. Looking for gold to bounce a little bit. Treasuries bouncy. Crude bouncy. Looks like some things are ready to kind of shake things up a little bit. So that's kind of what I'm looking for here. And I want to have you put your caution caps on here just a little bit. So that's kind of the message for now. You've got let's see, when I went and looked at the expected move for the week, you've got about at least 40 points or so priced in the options chain for the week. And, oops, sorry, I wanted to actually give you this chart back. At least 40 points or so priced in vol. So, from here, that takes us down to 2120 up to 2200. I'm looking more for the 2120 than I am the 2200, at least first. And it could start tomorrow, like I say, with the Fed speak and the numbers and the turnaround Tuesday kind of thing, plus the fact that the NASDAQ just didn't want to know. Literally from the bell this morning, the NASDAQ started pulling back. The Russell was strong. It tried. The NASDAQ won, and it was a tug of war, and the NASDAQ pulled us back a little bit. So that and the pieces of the puzzle, as I look around, I see like I say, with the dollar, gold, crude, bonds, all that kind of stuff, it tells me to don the caution caps. If you are super bulled up and uber long, you might want to at least look at a little, little insurance, little cheap insurance. Maybe find a put debit that protects you in the event of a pullback. Keep a little cash on hand to buy a lesser expensive, we'll say, nice way to say it, price in the way of a pullback, and then we'll talk about higher prices when it looks like the time is right. Until then, I will very much look forward to being with you again at the next update. You guys have good trading and a good night.